New condo sales in the GTA just went up for the first time in 3 years. And the headlines are already telling you that supply is, quote, thinning quickly. Now, if you read that headline and nothing else, you'd think the discount window on new condos is closing. Time to panic buy, right? Not so fast, because when you actually open the report behind that headline, the story it tells buyers is very different. Who's actually doing the buying? How much inventory is really out there? And a pricing gap so big that I can only really find 5 condos in the entire GTA where the math actually works. I'm Christian Jauslin, realtor with the Storey Team here in Toronto, and developer inventory condos are literally my specialty. So let's open this article up and dissect it together. Okay. This is from CP24, July 20th, covering Urban Nation's second quarter report for 2026. Urban Nation is the data firm for condos in Toronto. When they publish their reports, the industry reads it. So headline number 1, 702 condos were sold in the last quarter. That's up 52% from a year ago. And that's our first year-over-year increase since 2023. That's a big deal. And after 4 straight years of decline, the needle finally moved. So what moved it? The report credits 2 things: the elimination of HST on new homes and bulk investor buying. So remember both of those because we're coming back to them. But here's the headline the number skips past. Scroll down right here. Sales were still 86% below the 10-year average for the quarter. 86%. So yes, the market bounced, but it bounced from a 35-year low to a level that's still miles beneath normal. That's the honest starting point. So now let's ask the question the headline doesn't. Who bought these 702 condos? The report breaks it down. 535 of the sales, over the 3 quarters of them, were new completed projects. Finished buildings ready to move in, sales that were more than tripled from a year ago. Meanwhile, true pre-construction, buying a floor plan in a building that doesn't exist yet, sold 50 units, 50, down 80%. So why the massive split? 2 reasons. First, the HST rebate. The way it's structured, construction has to start before March 31st, 2027. And be substantially completed by the end of 2029. A tower that hasn't launched yet, there's a high probability it never qualifies for the HST rebate. So a completed unit sitting in developer inventory, it qualifies today. So buyers know this, and that's why the only game in town right now is developer inventory. Move-in ready units straight from the builder. I've got a full video breaking down exactly how that rebate works and how it gets applied. I'll link it in the description. Second reason, and this one is not in the CP24 article, remember bulk investor buying? A big chunk of those 535 completed sales wasn't regular buyers like you and I. You may have read it in the news back in May, but a Montreal private equity firm called the Gesta Group entered the Toronto market, buying unsold developer inventory condos in bulk. Their first purchase, a $30 million block of units in a single downtown building near TMU. And their stated plan, over 1,000 units, up to $500 million in the next 12 months. That's one of the largest single firm residential buys this market has ever seen. So when you see 702 sales, understand that a meaningful slice of that number is one institutional buyer scooping up units at negotiated bulk pricing. The end user recovery is real, but it's smaller than the headline might suggest. So here's the kicker. Gesta's own strategy on record is to rent these units until the supply shortage they expect between 2028 and 2030 shows up, and then sell into the rebound. Their senior managing director even said the HST rebate was a quote, a huge contributor to making these deals possible. So a sophisticated private equity firm looked at this exact market, record inventory, discounted pricing, HST rebate on top, and committed $500 million to trade a lot of retail buyers are hesitating on. They're not doing that out of charity, okay? They think this inventory is cheap. So hold that thought. Okay. Now, the headline claimed supply is thinning quickly. Is it? Here's where I think this headline genuinely misleads buyers. And I say that with respect because the report itself is more careful than the headline. Look at this line. Developer held inventory rose to a record high in the second quarter to just more than 5,000 unsold units, up 68% from a year ago. Let me say that again. Record high unsold inventory. And honestly, that 5,000 number understates it. Here's the thing. I see it every week with developers. They don't put all their unsold units on the price list. They release them in batches on purpose because flooding the market with their full inventory would hand buyers massive negotiating leverage. So beyond the official 5,000, there are hundreds, if not realistically thousands, of unsold units sitting quietly off their published list. So add to that what's still coming. Urban Nation's own numbers from their last quarterly report, nearly 22,000 units completing across the GTA in 2026, another 14,000 scheduled for 27, and 8,000 units still under construction right now that are unsold that are going to be headed to developer inventory when they finish. And here's the stat from that same report that should end this debate. Standing inventory represented 92 months of supply. 92. That's over 7 years. And Urban Nation themselves added that number doesn't fully account for units that were pre-sold where the buyer fails to close. Think about that. Thousands of units completing this year and next. How many buyers who signed contracts back in 2021 and 2022 can actually close at today's appraisals? Every one of those failed closings goes right back into developer inventory. So for a buyer shopping in the next year, supply is not thin. Supply is the most abundant it has ever been. Now, fairness matters. So here's where Urban Nation is right. The construction pipeline, the stuff behind all this, is collapsing. Pre-construction and under construction units are down 62% from the 2022 peak of about 127,000 units. No new project launches for 2 straight quarters, over 1,000 canceled units, only 448 construction starts. That is a real supply cliff, but it lands in 2029, 2030, 2031. So the truth is 2 things at once. Scarce later, abundant now. And abundant now is pretty much the textbook definition of a buying window. So why aren't regular buyers piling in if inventory is record high and there's a new $130,000 government rebate on the table? This is why, right here. Average asking price on completed unsold inventory in the GTA last quarter was $1,186 per square foot, whereas average resale price in new projects over the last 3 years was $830 a square foot. So that's a 43% premium, a record gap, what is essentially the same product. And even a 13% HST rebate is not going to close that 43% gap. The math just doesn't math. So that's why buyers are hesitating, and frankly, they're right to do so. And this is the important part. That 43%, that isn't an average. The report also says that units that actually sold went well below asking because developers have started aggressively cutting and negotiating since the HST announcement. Averages hide the outliers, of course, and the outliers are where the deals live. Over the last 2 years, I've helped over 23 buyers purchase developer inventory units. And across everything I track in the GTA, I've found exactly 5 projects where the pricing lands within percent of comparable resale or matches it outright, once you factor in the HST rebate, of course. 5 out of everything on the market. And in those 5, you're getting brand new units with full carry-on warranty, the HST rebate at basically resale pricing. In the other several thousand units, you're paying a premium the market will not hand back to you when it comes to reselling it. So to summarize everything, sales are up 52%, but still 86% below normal. And a chunk of the rebound is one Montreal firm buying in bulk. Supply thinning quickly is true for 2029 and misleading for 2026 because Developer inventory is at a record high with tens of thousands of completions that are still coming, and the average new unit carries a 43% premium over resale, which is exactly why the game right now is not to buy new condos necessarily, it's to buy the right new condo. So if you want to know which 5 projects made my lists, I'm not going to name them in a YouTube video because the list changes as developers constantly adjust their pricing, and because which one fits you depends on your budget and timeline. So book a call with me, link right below this video, and I'll walk you through all 5 with the actual math. And if you want to understand exactly how the HST rebate works, how it gets applied, and whether you even qualify, watch my full breakdown next. It's linked in the description. The window on that rebate has about 8 months left. So if new construction is on your radar, the research starts now. See you in the next one.